Hey traders, checking in on the stock market today. So bulls pretty much had their ideal day, alleviating a lot of fear, closing up at the highs after a very significant bull move. Is that our low? What do the bulls have to worry about at this point? It's now the bears who have the proving to do. All right, we've got lots to talk about. So the S&P 500 and the NASDAQ bulls proved it in the short term. How did they do so? We had the low of the dump, the high of a weak bounce. We held a higher low. And then we confirmed the trend change by breaking the high of last week's bounce. Technically speaking, the NASDAQ and the S&P 500 are now in a daily uptrend. So they proved it. The bulls proved it. The burden of proof is now on the bears. And the only way that the bears can regain any control is breaking that fear low. That is now our safety net for bulls. Bulls look at that and say, as long as we're above that, we're A-okay. So the only way that bears regain a fresh wave of fear and we're definitely in a different market environment would be a weekly lower high and lower low. We must confirm a weekly downtrend. When is the last time we confirmed a weekly lower high and lower low? I have no idea, but it's been a very long time. Even the COVID dump didn't do it. It was just a dump and then V-shape. So that would be very notable if it happened. We did it back here in 2018. Retracement sizes are going to be essential in determining probabilities. Right now, we already have a 50% bounce retracement on the S&P 500. That means it was a 49, 48% bounce retracement. But that means at the high of today, we pretty much were equidistant between the all-time high and the fear bottom lows. Just like that in 2 days' time. And we see the markets time and time again flip from massive euphoria straight into a fear drop, or from fear straight into FOMO. And right now, today was FOMO. Bulls were tripping over themselves to buy, and there were not many opportunities for bulls to make entries, pretty much aside from the resistance break. On the daily time frame, we had that resistance break as a signal. But other than that, there was really one 15-minute back test of that level, and then that was it. And of course, the end of the day, we did see a little bit of hourly consolidation, but bulls bought that dip aggressively, just a little hourly bull flag confirming. So bottom line is, bulls have an hourly uptrend. They have some confidence resuming, and we have earnings still to go. Google, Facebook, and Amazon this week. If all three were bearish, that would definitely shift tone, because in my opinion, the tone shifted to bulls when Apple earnings reaction was bullish on Friday. And that pretty much, or was that Thursday afternoon, whenever that was, it pretty much was bulls taking over from that point forward, and Apple is now our bounce leader. I'm going to call Apple our general because it is the strongest major tech name. It is already well over a 50% bounce back towards that all-time high. We know it's the most important stock in terms of the amount of holdings that are present for Apple in the S&P 500 and in the NASDAQ. You look at the 2-week time frame, it's extremely healthy still. So for me, I'm now looking at Apple as a confidence guide for the tech sector. NASDAQ broke daily resistance first. The S&P 500 followed, but the weekly bounce still has more work to do because we led the way to the downside. Our retracement size on this weekly bounce at this point is still a possible bear flag. Retracement of 39, 40%. So the NASDAQ wants to get to 50%, which would then, again, create space for a weekly higher low to form once we top out. And the hourly uptrend is our short-term guide. The bulls have the hourly uptrend in their favor. They have complete short-term control. When we lose the hourly uptrend, bulls are going to be scouting daily higher lows. And we're watching for bears to try and make a stand for weekly lower highs because, again, that is their only hope. So 2 scenarios from here. That's it. Well, let's say 3. So scenario 1, SPY. Bears confirm it. Weekly downtrend. Everything's different. Bear market. Sky's falling. All that. Scenario number 2. V-shape to a new all-time high. There have certainly been 150 times that SPY has done that where I would not have expected it to. That being said, this pullback is a bit more for the bulls to overcome V-shape to a new higher high. Scenario number 3 would be a tightening daily range. And again, keep in mind the volatility that we've been seeing to start this year isn't going to last. Volatility only lasts so long, and then we enter prolonged periods of tightening ranges. So for those that enjoy this volatility for trading, just be aware that we're going to see ranges establish and then ranges tighten up and volatility drop off at some point this year. and maybe a weekly equilibrium will be it. If we get another $10 of upside on a bounce, then we top out for a weekly lower high. We're going to look for a weekly tightening range for most of February if that takes place. So those are the three scenarios. Those are the only three ways that it can play out from here. If we see the fear lows stay and they're set, and we make our way back towards all-time highs throughout the rest of Q1 2022, in my opinion, what I'm going to be watching for is a rotation out of value back into growth. We know growth has been absolutely crushed for 6-8 months at this point. And granted, keep in mind, I was looking for growth to see rotation back on these monthly higher lows, and we saw worthwhile bounces, and there was money to be made on those bounces, and some swing trades went well, but we rolled over. Bulls obviously did not hold those gains. But what I'm watching for right now, there's a number of charts we can use to gauge growth versus value. And if we look at this chart, ARKK, which we know is growth, divided by XLF, which we know is value. Look at the 3-month time frame. What is this chart showing us? This chart is showing us a year of massive rotation into growth from the COVID lows. It is showing us a year of massive rotation out of growth and into value over the last 8+ months. So what happens now? Well, if you show me this chart and don't tell me anything about it, I say I'm scouting a higher low and I'm scouting an equilibrium as the most likely scenario. So granted, it's not your standard price action chart, but what I'm watching for is another great rotation. There have been 2 great rotations in the last 2 years. And again, the only way that we see rotation back into the highest risk, highest reward names being growth is if our fear lows are in and the market just does its slow climb back to all-time highs, which you've seen many times. So if that happens, I am focusing on growth and I am watching for relative weakness in energy and in the financial sector. Another one, so this is ARKK and XLF. If we want to look at IWM and XLE, energy sector, same chart. Massive move up for growth, leading the way. Massive drop down for energy getting its turn and growth dropping notably. But again, you show me these massive charts. It's the same reason I just played a cryptocurrency mana monthly bounce for that higher low, and it went real well. Massive move up, massive pullback, scout and equilibrium. And again, that's only if our fear low is in. If our fear low is not in, then everything I just said is out the window and I'm not going to be looking towards growth. But I am positioning myself for that potential. I'm adding some swing trade growth names, and we'll look at those when we get to them. Semiconductors, solid bounce. We have names that are still in daily downtrends. Semiconductors, biotech, IWM growth, Russell 2000. There's one more. Tesla. They're all still in daily downtrends because, again, the S&P 500 and the NASDAQ held a higher low Friday and then broke resistance. All the names that I just mentioned dropped to lower lows on Friday. It's confirmed bear flags with 0 follow-through, but a confirmed bear flag with 0 follow-through means scout the other direction, so obviously a big bull bounce is taking place. A short-term pattern that I'm watching for, one of 2 things is going to happen tomorrow. If we reject from daily resistance, 279 in this instance for SMH, I'm scouting a 4-hour inverse head and shoulders. If we fail daily resistance, I scout a higher low compared to the low of Friday, and then we look for the trend change for the bounce to then get followed through. And again, it's the same setup on Tesla, XBI, and IWM. So I'm watching those daily resistances on all those names very closely tomorrow, and I'll know more by the end of trading tomorrow if this pattern is still in play, and then we'll watch it develop Wednesday and into the rest of the week. So all about 278.89. Anything under that is just a daily lower high, but again, the size of the bounce big enough that we will scout a higher low once we do top out. NIO. So I played NIO. I've been focusing on the biotech sector and bounces in that sector over the last week plus. But on Friday, it was NIO. And I had no intention. NIO was my most profitable traded ticker in, I think, 2021. If not, then it was 2020. I'm getting my years mixed up. But sometime in the last 2 years, it was my most profitable ticker. I think Tesla was 2020. NIO was 2021. And I have not traded it in months, and I had no intention to trade it Friday. But a trade smacked me in the face, and so I traded it. And I shifted my focus away from the biotech sector, which is all well and good. They were fairly similar bounces anyway. But I'll just go into hindsight why I was interested in NIO. So literally the way that it played out is I'm looking at my screen and I see NIO is down something like 9% on Friday. And I already knew it was really beat up. So I say, good Lord, we're down 8%. No, it got to 9, just right around there. We're down 8% after dumping all last week. We are insanely crushed. I think in the chat room I said it's falling apart at the seams. You know I like bounces. Okay, is there anything that I can see? I zoom in. First hour of trading. I recognize volume. I say, okay, we have 40% of the highest volume days volume in the last month plus in the first hour of trading. I know it's going to be a high volume day. So that tells me look for a volume climax to mark a temporary bottom. From there, I go to the 4-hour time frame. Okay, 4-hour RSI at that point in time was down at 20 or 19. And I look at historical RSI levels. Okay, we just bounced from 20, go back here. We bounced from 18, go back here. We bounced from 19, back here, from 19. So you get the idea. Anytime in the last few years, we have a very high probability of bouncing between 18 and 22, marking a bottom. So volume plus that 4-hour historical RSI, I say, all right, I'm in for the bounce. And so on the 5-minute time frame, I went aggressive, snagging this 5-minute high or low, had a good entry right down at the low of that consolidation, and then I added to it even before the bull break took place there. And so then I had a very nice winning position, and I scaled out into a swing-sized position because at that point my break even was under 1931, and I know that I want to let that daily bounce play out. So today, gap up open, massive run. Today we were up by the close 17%. So I scaled out into this, and I definitely left some profit on the table. You know, I exited some in the mid 22s. I exited a little bit more in the 2330s, a little bit more in the 2350s. I think my last exit was 2350s. We then went up 4% more than where I exited. So definitely left some money on the table, but I don't regret that at all because again, I'm playing counter trend on every single time frame except for the hourly. We're in a monthly, weekly, daily downtrend, and we just bounced 25% plus in literally, at that point in time, it was 7 hours of trading. So it was one full trading day, and we were already up 20% plus. So again, you give me those fast gains, counter trend, I'll take them every single time. And I'll leave money on the table and be wrong sometimes, absolutely, but that's where I stand. So out of that position, but I will look for re-entry. And again, why am I interested here? Look at the 4-month time frame. If you show me this chart and you ask me what is the most likely scenario, I don't care what time frame it is, we're scouting a high or low, and we're going to scout a meaningful bounce to then scout a lower high. Is the bottom in? Can't possibly say. We're not even in a daily uptrend. We're just looking for a daily lower high. But again, just like I just showed you the growth chart and why I'm looking for a higher low on that time frame, and why, I mean, really, I've had a revelation in the last year of trading, last year, where my best swing trades, it was probably my best swing trade year in as long as I can, maybe ever. And it was from playing the monthly higher lows from straight up to big time pullbacks, scouting the monthly higher lows. Bitcoin and Ethereum, it was ARK. And so I'm keeping that same mindset. I'm on longer term time frames, but I'm recognizing that I'm doing well with these bigger picture patterns and then just zooming in, trying to pinpoint those entries a bit better. So at this point on NIO, I'm not in a rush to get back in. Very minimal hourly consolidation. I would have, if the hourly consolidation was more significant, I would have scaled back in some. But at this point, I'll wait till this bounce tops out, and then I'll look for a daily high or low entry if I'm going to be looking to re-enter any swings. But a really nice, very fast gain, and certainly faster than I would have anticipated. Tesla, significant bounce today as well. But again, it's that inverse head and shoulders setup where if we fail, anything under 788 is a daily lower high. And if we reject from that level, we scout a higher low, whether it's on the 4-hour or the daily time frame, to then look for the trend change. So add it to the list of inverse head and shoulders watch if we reject from resistance tomorrow. Healthcare continuing its bounce. Today was very clear where it was just little observations. I was public live streaming, so I know a lot of you were watching, but the NASDAQ led the way with strength this morning, and XLF was directly inverse to the NASDAQ. So 15 minutes of up, 10 minutes of pullback. I'm rounding. and then a bull flag confirmed and bulls off to the races. Look at the financial sector. 15, 20 minutes of pullback, 10 minutes of bounce. At that point in time, I looked at it and said, we are directly inverse XLF and QQQ. We can have confidence in QQQ and tech leading the way on the bounce, and that's a good sign, but we cannot have fear alleviated in the market unless all of our sectors, all of our major sectors are going up together. And from that point forward, this next 5-minute candle changed everything about correlations, because at that point, QQQ headed up to the new high of the day, and if we were going to stay directly inverse, that means XLF would have tested the low of the day. So as soon as that happens, big win for the SPY bulls, because now we have all of our major sectors at the high of the day at the same time. And that's the big vote of confidence for bulls for bounce follow through. So XLF, daily higher low set, has to change the trend for the bulls, 39.34. If we fail that level tomorrow, we have a daily equilibrium to be keeping an eye on and the potential that we remain within a tightening range for a few more days this week. So that's a key level tomorrow, 39.34. Still in a daily downtrend at this point. We're shaping up the daily uptrend, but we're not there yet. IWM, still in a daily downtrend as long as 203.55 is resistance. So it's another name where if we fail that level, I'm scouting the inverse head and shoulders as a potential setup. So key resistance tests on a handful of names to see if the setup that I'm looking for is going to develop. And if it doesn't, then I move on. But if it does, I'll be ready and waiting. So for IWM, it's going to be all about 203.55. And the hourly uptrend is our short-term guide, and we would need to lose the low of the end of today without breaking that daily resistance, and this refers to Tesla as well, and SMH and XBI. That would be the start of the potential of that 4-hour right shoulder forming, if the low of the end of today breaks tomorrow into some consolidation. Biotech sector. So solid bounce. And again, I look, oh, did I make a mistake going to NIO and missing this bounce in the biotech sector? And, you know, it bounced. The leveraged ETF bounced 33%. NIO bounced 26, 27%. So pretty much the same thing. But it's the same setup where if we do not break 95.62, we scout the inverse head and shoulders. So key resistance test tomorrow. And if we reject, plenty of space for a higher low due to the size of this bounce. So if we see rotation back into growth, I'm certainly going to be focused on the cannabis sector and some of our other high-risk sectors. So CGC, grabbed a position today. Daily trend change confirmed. When's the last time we saw a little daily higher low and higher high on CGC? The answer is it's been 3 months. Look at the weekly time frame. Stair step waterfall drop. Lower high every single week for 10 weeks in a row. Broken today. So the weekly bounce is underway. The position I grabbed, with a little help from Pedro in the chat room, same idea, and he just helped me see it a bit more clear, but pull back on the 5-minute, confirm a 5-minute bear flag with 0 follow-through, make the entry, because that's a 15-minute higher low shaping up. So I entered at 779. When we failed the high of the day, I exited half. So maybe 779 to 787, something like that, to put my break even at 771, so pretty much right here, and I'm in that swing position. It's a small swing position, but I've got a handful of small growth swing positions because, again, I'm just positioning where if we see V-shaped bounce, grind back to all-time highs, I do believe growth is going to benefit a significant amount from that. And CGC, higher low on the hourly, 784. So if I want, I can put my stop at break even and try and let it ride out, knowing that the bulls now are just looking for a weekly lower high with tons of proving still to go, but they proved it in the short term for the first time in 3 months. Aside from that, we got the US side, MSOS, tightening daily range, held support, but anything under 2208 is just a lower high, so still very much range bound, and bulls not really proving anything yet at this point, but I did grab an individual name. VRNOF is an individual multi-state operator in the USMJ space, and the reason I grabbed it is because I like this weekly base of support. It's the only one that still has a weekly base of support, and it's essentially a triple or quadruple bottom down at $9.86 to $10, and looking for a play off of that support, and I will exit if $9.86, the all-time low, breaks. But if that level holds, and if fear is alleviated from the market, and if we see rotation back into growth, then the risk to reward would very much be worth it. My risk is 6 to 7%, and the reward, if things went perfectly, would be 50 to 80%. But not holding my breath, certainly don't expect to nail it, just recognizing a solid risk reward scenario. And the last one I'm in is the psychedelic name, MNMD. So entered on the daily high or low when we had the double bottom Thursday and Friday, 90 cents. I got filled maybe 94 cents. And again, much smaller position because the volatility here is massive. But trying to change the daily trend, look at the weekly stair step drop, lower high every single week. 10 weeks in a row, that broke last week, and the bulls are trying to shape up a daily trend change. Entirely possible that we just remain within a tightening range. If we were going to break 132 resistance, we would need to see notable increasing bull volume for that to happen. But these are just a handful of small swing positions, but when they're all added up, it's sizable enough to matter. And it's just a question of, can the bulls continue to keep control from here? I will bail on these positions very, very quickly if weekly lower highs shape up in the broader markets. And I do believe that Amazon, Google, and Facebook earnings reactions are going to help us gauge some sentiment as well. As far as headline risk, I think it's just Russia at this point. I do not think that there is any COVID headline risk. And I do not think that we have to worry about the Fed until next FOMC. So the next couple days are going to be real interesting. Scouting 4-hour inverse head and shoulders. Scouting bearish short-term positions. If we gap up tomorrow, I'm scouting bear all morning for sure. But just looking to offset my bull exposure. And that's about that. Good month of January. Wrapping it up. Crypto names trying to bounce as well. MARA. Double bottom to the penny. And again, you look at this monthly chart. Big time pullback. Even just the weekly, watching for a shift. Trying to set up the daily trend change. Double bottom to the penny. Bulls must break 24.22. So keeping an eye on the highest risk, highest reward names. I will continue to check back in on how growth is trading relative to value. Honestly, one thing I'm looking for is oil weakness. If oil in the energy sector starts to show weakness and growth names benefit during that period in time, it's just going to be another point in favor of I'm looking in the right direction. Certainly not married to any of these ideas. Taking it one day at a time. I will have more information tomorrow than I have right now. Do good things. Thanks for tuning in. See you tomorrow. So we're going to do some more Adventure Time here. Not going to have plant updates until late April, early May when things really get going. And those bugs are on their way, so I'll keep you posted on the praying mantis eggs, which will be exciting. So we're leaving Costa Rica, which was wonderful. This was from the first chat room that we ran when I was trading in Costa Rica. And this is when the top was hit on the Euphoria USMJ penny stock boom. And this is my partner, current partner, Jason, business partner, made this up. Thought that was funny. Then I went back to Charlotte for Drumstrong. Drumstrong is a cancer organization, a charity that I've been working with for, I think this will be the 10th year, going in about a month from now, back. This is their 13th year, my 10th year. It's put on by my college roommate and his father, who are cancer survivors, and it is just a really good time raising awareness, raising funds for charity. And we have a big old drum circle, usually a couple hundred people big. We used to drum for like 36 hours straight, which got pretty absurd because we do an hour more every year. So we cut that down a little bit, but it's cool because we do these live streams where there's Drumstrong Sydney and Drumstrong Japan, and they do live streams and we drum together from across the world at the same time. And just a lot of good people, a lot of good music, and a really good fun time. From there, I followed a woman out to... What's it called? Kings Beach on Lake Tahoe. So, followed a woman out to Lake Tahoe, and about 2 weeks after getting there, she decided she didn't want to do it. So That was my college sweetheart. And that was all right. So I didn't know anybody out there at that point. So I was just trading. Every day I'd trade and then I'd go on adventures. And then I realized I don't really know anybody out here. And the reason why I'm out here is not really there anymore. So I only stayed for a few months, but it was mind-blowing. It was way cooler than I thought it would be, just in terms of mind-blowing nature and great hikes everywhere. So many great hikes to go on. So had a good time and explored it while I was there, and would certainly recommend visiting Lake Tahoe, and I will certainly be going back. More hot springs close to the side of the road, and waterfalls of hot water. So California is where it's at. Look at that selfie. That's level 10 selfie. That's me holding a flower pot, but the flower pot's my phone, and it's a shadow, and the flower is real. Pretty good. So we'll check back in tomorrow, and I'll see you then.